Hello everyone, my name is Apurv Pandey.
And this is Nidhi Upadhyay, and we are back with our next episode of Market Buzz.
So in this episode, we will be discussing about the Indian economy, the global economy, and then we will be discussing about the outlook for the upcoming week. So let's get started with the episode. So Nidhi, tell the listeners about the Monetary Policy Committee.
So, the Monetary Policy Committee of the Reserve Bank of India has decided to increase the repo rate, the main leading rates to bank, by 50 basis point to 5.4% with immediate effect. RBI retained GDP growth forecast at 7.2%. Though the Indian economy has been impacted by the global economic situation, RBI Governor Mr. Shaktikant Das said that the economic recovery in India is showing sign of broadening. The Reserve Bank of India has retained its retail inflation forecast for the current financial year at 6.7%.
Thank you, Nidhi. The e-bills generated by businesses for interstate commerce in July were up by 18% on year and 15% on month, suggesting that the goods and services tax collections in August could be upwards of INR 1.5 trillion, which is becoming the new monthly normal. India's services PMI fell to 55.5 in July from 59.2 in June. The sector lost momentum in July as demand was curtailed by competitive pressures, elevated inflation, and unfavorable weather, pointing to the slowest growth rate in 4 months.
Amid concerns over the decline in the value of rupee against the US dollars, Finance Minister Mrs. Nirmala Sitharaman on Tuesday asserted that there is no collapse of the unit and it is actually finding its natural causes, while adding that the RBI is continuously monitoring the local currency and intervening only if there is volatility.
India's July trade deficit widened to an all-time monthly high of USD $31 billion in July 2022 from USD $10.63 billion a year later. Exports fell sequentially 12.2% month on month in July to USD $35.2 billion from USD $40.1 in June. The exports increased by 43.6% year on year to USD $66.3 billion, led by oil, which constitutes 70%, and non-oil gold imports, which was roughly 45% up.
The Reserve Bank of India's Composite Financial Inclusion Index, capturing the extent of financial inclusion across the country, rose to 56.4 in March 2022, showing growth across parameters. India's 5G auction received a record INR 1.5 trillion of bids, of which the government will receive 133.6 billion in the first year.
GST collection in June soared by 28% year on year to INR 1.49 trillion, becoming the second highest value collected since the introduction of the GST regime. The Finance Ministry said that till July 2022, GST revenue has jumped 35%, displaying a very rare high buoyancy. Prime Minister Mr. Narendra Modi on Saturday asked the state governments to resolve the payment crisis that undermines the financial and operational viability of the power sector entities by clearing subsidies to distribution utilities, DISCOMs, in time, and also ensuring that the government departments and local bodies pay their power bills before the due date, stating that unpaid dues to the power sector entities stood at a staggering 2.5 trillion INR. He said state subsidies due to DISCOMs alone were over $750 billion INR at the last count.
The central government fiscal deficit touched 21.2% of the financial year 2023 B in the June quarter, as against 18.2% in the year ago period. Growth in the output of the 8 core infrastructure sectors slowed to 12.7% in June from 13th month peak of 19.2% in the previous month. As the favorable base effect started to wane on a MOM basis, our momentum decelerated. Core output decreases by 4.1%.
So, this was all from the Indian economy. Now, let's look at the global update. When we talk about the globe, the Bank of England raised its main interest rate by 50 basis points to 1.75%. This is the sixth consecutive rate hike in a 8 to 1 voted ratio. It is the longest rate increase in terms of magnitude of hikes delivered since 1995. This was a way before, like after we were even born. The UK MPC expects inflation to peak at 13% in 2022 before falling sharply over 2023 and 2024. The inflation was expected to fall to 2% in 2 years' time and 0.76% in the 3 years' time. The economy was expected to enter a recession in Q4 of 2022. This is the statement of Bank of England that their economy is expected to enter into a recession in Q4 2022 and record a negative growth in 2023. The underlying message was dovish with no clear case for further tightening provided.
China likely fired missiles over Taiwan during its military drills on Thursday. Japan said part of Beijing's biggest cross-strait exercises in decade after US House Speaker Nancy Pelosi visited the self-ruled island. Federal Reserve officials again signaled that they will do what's required to cool high inflation with rate increases, even if that raises the risk of recession. Federal Bank St. Louis President Mr. James said he favors a strategy of front loading big interest rate hikes, and he wants to end the year at 3.75% to 4%, while Mr. Thomas and Mr. Neal said that the central bank was committed to lowering inflation and a recession could happen. San Francisco, Mr. Mary maintained that the central bank can counter inflation without triggering mass unemployment and an economic downturn.
So, guys, the Federal Reserve is also dovish and it is also indicating that a recession is likely coming, which was indicated from the minutes of meeting. The third important event that happened was the OPEC Plus meeting, and OPEC Plus is set to raise its oil output target by 100,000 barrels per day from September and warned of severely limited spare capacity in a setback to US President Joe Biden's attempts to convince those Arab leaders to pump more crude. But this didn't happen. JP Morgan Composite Index Global PMI fell from a posted 50.8 in July down from 53.5 in June. The headline index has stayed above the neutral 50.0 point mark for 25 months. Growth slowed to a 6-month low in the services sector, while output stagnated for manufacturers.
Geopolitical uncertainty has picked up sharply as the Speaker of the US House of Representatives landed in Taiwan. She became the highest ranking American politician to visit Taiwan in the last 25 years. China was swift to respond by commending the visit, announcing military exercises around the island and imposing sanctions on Taiwan.
So sanctions on Taiwan have already been started by Chinese government. The PBOC will keep financial for the real estate sector stable via channels including bonds and loans, while accelerating efforts to explore a new development model for an industry as per an official statement. If you talk about the benchmark equities in India, benchmark indices are likely to open higher, tracking the Asian markets ahead of the RBI MPC's decision. This was our outlook on Saturday, and tomorrow, due to these central bank decisions and US Fed minutes of meeting outlook, we are having a dovish or a hawkish stance on the markets, and markets might open negative on Monday. The trend might likely to continue during the entire day, and as the week progresses, we can see some swift rally of recovery ahead. Nifty is looking much more stronger than Bank Nifty because the crucial level of 38,000 in Bank Nifty is acting as a strong resistance, and only if Bank Nifty moves above and sustains at 38,000 with significant addition of puts or significant unwinding of calls at the 38,000 strike price, we may see Bank Nifty soaring upwards towards 38,200 and then 38,500 to 39,000, and in the upcoming weeks to even 40,000. Nifty, on the other hand, if Nifty sustains and crosses the level of 17,500, it can rally to 17,600 and 18,000 and up to 18,200 in the upcoming few days. It can happen in this week, upcoming week, or maybe a few days ahead in the later week. So overall, guys, we have also shared a detailed concept about this on our YouTube channel, which you can watch. Thank you so much, guys, for listening and tuning into our podcast. Do stay tuned and leave us a comment below. Thank you, guys. Stay tuned and happy trading.